Hi, fighters. How you doing? Travis Witherspoon, Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. This is the second installment of the trading pairs, or the best trading pairs that I think that you will end up capitalizing on in 2020. I do believe that this pair has 1,900 pips of overall downside movement, and right now is right there in that actual position to where you can start keeping your eye out on it. It's not there yet, but once the new year kind of crosses over, I think that you're going to end up seeing a definite move to the actual direction of where I think it's going to end up going. In the pair that I'm interested in talking about right here is actually the Australian Japanese yen. So let's jump into it real quick. And I'm going to take myself off the screen and I'm going to end up showing up some other stuff so you can be able to take a look at it and get an example of some of the stuff that we actually end up doing here at Carter Cow Capital. If you look at the overall daily chart right now, we can see that the position for the Australian yen is actually in a buy position. We can end up seeing on a weekly that it's actually in a buy position based off of overall the indicators. But if you look at the monthly chart, you can see that overall from a monthly perspective that it has been bearish, meaning that what's happening is that the market is actually retracing instead of actually being full-blown bullish. So let's talk about this, and let's talk about what's actually happening on this chart. If you look at it from a overall monthly perspective, this is what you're seeing. And let me explain why I think there's actual downside movement. I believe that there's a head and shoulders pattern that's actually forming right now on the chart as we speak right now. And this is a long-term head and shoulders pattern that's actually showing. And I'm just going to show it up to you right here. So here goes the left shoulder. Here goes the head. And here goes your right shoulder that's actually being formed at this point right now. Now, if it breaks past this actual position, typically what happens is that you end up using just a trend line and you go from the head to the neckline. And then after that, bring it all the way down to see what the actual direction is actually going to be. For the overall downside movement, which is suggesting that it's going to end up moving to the lowest lows that it's ever been. Me personally, I do not think that's actually going to happen. The reason being is because you can look at previous price action points. You can tell that the market has been hitting right around 5,600 if it has broke below that low for its overall position. Now let's talk about how you can be able to get into this position and actually be able to hold it as an actual position or just sell from that actual perspective. From a weekly perspective, what we're looking at right here is this. We can see that the market is actually moving from in an upward channel where it ended up bouncing off of 7,100 and is starting to react off of 7,600. And if you notice, it reacted off of 7,600 one time before and started to break down and fulfill its overall de-extension of its last potential movement. Right now, I believe that it's pushing down, and if you notice this downtrend line, it has reacted off of this trend line before and broke down. It has gotten past this trend line before and broke down again, and it's starting to push up towards this trend line again, and it's starting to push down with the weekly stochastic being almost in the oversold zone. So that means that there's a couple more weeks of actual patience that you have to have before you end up getting yourself into this position. But once it ends up hitting this reaction zone, there is a high probability and chance that it will push down and break towards the actual position, which means that it's breaking the bottom side of this down head and shoulders pattern, which means that I think there will be some extended movement to the overall downside. So let's go back to the daily chart and let's just see where it's at right now and kind of get an understanding of where it is. Right now, the daily chart is slowly moving from the buy zone over to the sell zone. We can see that there's a high price that is actually forming. And right now, there's a Fibonacci the Fibonacci or down Fibonacci zone that has not been broken as of yet. The A position or the beginning of the actual move was at around the 76.30 area. And if that 76.30 area holds, which means that if we go back up to 7,600 and it starts to stay around this position and we have this break based off of this purple trend line down toward that movement, then I think there will be a extensive downslide of this actual pair. Now, obviously there's other catalysts and things that ends up happening based off of the overall move, but I do believe based off of what we're looking at with this head and shoulders pattern, which has been broken and is basically testing right now the zone in which the first time that it tested, it ended up sharply breaking down the first time and it's starting to go back up and do the same thing. I do think there would be some extensive movement towards the overall downside. Now, with that being said, With that being said, if you like what I end up sharing with you and if I provided value for you, please make sure that you end up smashing that like button. Please make sure that you end up joining one of our weekly webinars that we have that is actually free to anyone that ends up starting and being able to join along with the group. And also click on the Carter Cal Academy join page and actually end up joining in so you can be able to get more information like what I'm doing right now. Like always, plan your trade, trade your plan. Everyone, y'all end up having a good one.